Do you really want to sell stocks after the worst day for the averages in 2 years? Does it make sense to bail on the market when the Dow just plunged 1,032 points, S&P plummeted 3.35%, and the Nasdaq nosedived 3.71%? Is that the right thing to do? Or should we treat this meltdown like a viable pullback? Honestly, it depends on 5 factors. So let's check them down. 1, do you have enough cash to buy something into weakness, or do you need to borrow money to make that happen? If you don't have a decent amount of cash on the sidelines, you shouldn't do any buying here. If anything, maybe do some selling the next time we get a moment of strength, so you'll be prepared for the next big down day. History, by the way, suggests we could bounce tomorrow. So maybe take advantage of that lift. Do some selling. This promise is not going away. 2, look at your bank account. Do you need that money in the near term, say the next 12 to 18 months? If you don't think you'll need it and you haven't bought anything yet, then I think it makes plenty of sense to start putting that cash to work, but only if the market gets hit again. Do not buy a rally, please. Get a rally? You missed it. It's okay. 3, you need to recognize that there might be more bad news ahead that could take us to still lower levels. We still aren't oversold by any means. It's hardly down at all. So while we just had the worst session in 2 years, it's very difficult to call this a tremendous buying opportunity, especially given all that frothy action last week. 4th, do you mind getting the bare minimum return from a certificate of deposit, CD? If so, I can't really help. You don't need me. Otherwise, I suggest coming in tomorrow, if it's down, and buying a utility ETF or a dividend ETF, because even if the stocks are high, anything with a good yield is a bargain versus the incredibly low rates you're getting from bonds. 5th, ask yourself, do you mind owning individual stocks? The best values here are in individual stocks, not the indices, because the indices are experiencing torrential selling, if not a meltdown. It takes the good down with the bad. We're going to have a couple good ones later in the show. You'll know what I mean. Now, once you ask yourself those 5 questions, then yes, for some people, it may make sense to start picking at beaten down stocks, especially if they keep falling.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.